Hello, everybody, and good morning. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. I'm sorry I missed you last week. We had some technical difficulties and had some trouble getting the video up, but it was a pretty quiet week, so we didn't miss too much. Today, as usual, we are going to take a look at the broad market and see what's been happening over the last few weeks and maybe what we can expect going forward. Then we're going to take a look at the economic calendar and see what the major events are for this week. And then I'm going to share with you 3 top-ranked stocks with momentum trading setups. So this is going to be a pretty busy week. It's really the last busy week before the year end. And there's a lot of major economic events this week, so let's take a look at this economic calendar. Monday's quiet, no major reports to see. But Tuesday, we're going to really get into it. We got CPI and core CPI, which are, of course, 2 very important numbers and important factors for the Federal Reserve's interest rate policy. And then Wednesday, we got PPI, a different form of inflation, and core PPI, producer price index. And then in the afternoon, we're going to have the Federal Reserve, FOMC, has their monthly, every 6-week meeting to tell us if they're going to leave rates unchanged or raise rates or cut rates. For now, the market expects them to leave interest rates unchanged. And then we're going to get the press conference from Jerome Powell. We'll take a little bit of closer look at interest rates in a minute. So that's the big thing on Wednesday. The Federal Reserve is talking, always very important. And then on Thursday, we're getting more information on the job market with jobless claims and retail sales, and a couple more data points, but those are the 2 or 3 main ones. We got CPI, PPI, and FOMC meeting. So Tuesday and Wednesday, big days, and then I expect Thursday and Friday to sort of be digesting that. So when we take a look at the broad market, it's been a strong market. We've had 6 consistent weeks of green, which is not very common. 6 weeks. And so I want to take a look quickly at the seasonality chart. So this is the NASDAQ here. S&P looks similar. S&P is actually a little bit stronger, but as you guys know, I prefer looking at the NASDAQ from a technical perspective. So again, like I said, there's a lot of economic activity this week. I expect the year end to be pretty bullish, right? You get that Santa Claus rally in the last 10 days of the year. But, we got this bull flag here. Maybe immediate expectations would be, okay, we break out higher and we start the leg higher. Obviously, that's possible. But some important data here. And if there was going to be a time where the market got a little bit more volatile, maybe we test the bottom of this range, maybe we break it down below this range and reverse higher by the end of the week, and then we do the run. I think there's a possibility we get a little bit of volatility and we don't just grind higher, because we had some major events, and if the market wanted to be challenging and really shake out these weaker hands before that final year-end rally, I think now would be the time. So we look at the seasonality chart. First of all, here the S&P is a little bit more pronounced. First of all, the market has followed this seasonality chart incredibly close. A lot of the major swings, corrections, rallies have followed this chart quite well. So if we look closely here at the December section, we can see the first half of December is choppy, right? There's sideways action and maybe a down move into like middle of the second week. Down move into the second week. And then that final Santa Claus rally right here. So I think it's possible we get some more some more challenging action this week. And obviously that could be wrong, and the market just makes its final bull run and just gets going. Or maybe it just trades sideways. But there's a lot of action this week, and I just want to remain a little bit more cautious. I'm not ready to go all in on this breakout. I think it's just going to be a little bit more challenging. But again, I think we're setting up for that final Santa Claus rally. And I think we're going to stick with these seasonal trends, maybe some trade within this range. So I think that's an interesting development. And, I'm going to share some momentum trades. Now, they don't need to stick with the market. They can just run farther than the market. But they could also mirror the market if there's some strong moves lower. Quickly, let's take a look at interest rates. You got the 10-year Treasury here. It's at 4.27%, well off of its 5% high. We've made a really, really hard move off of this 5% level. And it's actually starting to firm up a little bit. You can see as interest rates eased, it really powered that strong move in stocks over the last 6 weeks. But starting to ease, interest rates starting to rally a little bit. So again, that might play to a little bit of a more challenging equities market this week. So, if this gets another jump up to 4.4 or something like that, it's going to be a little more challenging for stocks. And something else. Okay, we got oil right here too. Oil has sold off aggressively since late September. We moved from 95 all the way down to 70, which is just a really strong move. Everyone was really bullish as we were rallying, and now everyone is extremely bearish. I kind of think we're going to get sort of a mean reversion rally here in oil into the year end. I think it could get started real soon. This is a hard move lower. It feels like sentiment is extremely bearish. So I think you get a little rally out of oil. And I'm actually going to highlight an oil stock too, which I think should benefit from that. And it's a top ranked stock. And quickly, I just want to go over the FOMC meeting. So last week, there was a really strong unemployment report, and it was stronger than expectations. People were sort of expecting the employment market to sort of continue to weaken, and instead we got a strong report. I've read that this report is a little bit noisier. There's a lot of seasonal factors, a lot of seasonal hiring near the end of the year for the holidays. So whether that is true or not, the market took it as true, and that employment is remaining strong. And we saw some pretty wild swings in interest rate expectations and the Federal Reserve expectations. So you can see here, these are the expectations for next year, through next year at the meetings. Right now, the first interest rate cut is expected. There's a 49% chance of an interest rate cut in May 2024. So just last week, and you can see March, it's nearly a 60% chance that they leave it the same in March. Last week, we saw that March, this is the March meeting, see 38.4%, and a 60% chance of they leave it the same, about 40% chance that they cut rates. So we can see last week, it was as high as 51%, and I'm pretty sure it was as high as 59%. So everyone was thinking that they were going to cut rates in March, and now people are easing off. We got this higher for longer narrative is starting to build a little bit. Everyone was really jacked up last week and the week before. Oh, we're cutting rates. The stocks can rally. So it's pretty wild, a quick swing in interest rate expectations, and clearly labor market tightness and what's going on, the dynamics in that market are a really interesting factor. So, initial jobless claims Thursday, keep an eye on that. We got a lot of data coming out. Again, I'm just leaning towards this. Maybe this week's a little bit more volatile, a little more challenging, and maybe you start getting positioned for this year-end rally, maybe at the end of this week or after these major data points come out. So yeah, that's the broad market setup. And now let's take a look at these individual stocks. So the first one we're going to look at is PDD Holdings, also known as Pinduoduo. It's a Chinese e-commerce company. It's extremely fast-growing company. It's got an innovative sort of market where people can bid together on products, and it's growing like wildfire. You can see earnings growth is expected at 40% annually over the next 3 to 5 years. And it has a pretty, the Chinese stock market has been killed over the last couple of years, 18 months or so. And it's got a really reasonable valuation, 24 times forward earnings. So it's got a PEG ratio of just 0.6. It's pretty appealing. Of course, there's additional risks that come with investing in Chinese stocks, but for a trade, I think this one is pretty compelling, and I'll show you the chart right now. So we can see it's been really strong since the middle of the year. It's moved from 60. I mean, it's more than doubled in the last 6 months. And, it's a strong stock. We gapped up on earnings, built out this bull flag, held this level of support on Friday, got a nice reversal. And it's building out this flag. And, maybe it builds out and then breaks out. But I like this flag setup here. So as long as it stays above $138, I would definitely keep it on the watch list. And once it breaks out above, let's say $143.50, I think this one could be a really good trade into year end. Again, the broad market factors are going to be an important consideration when taking these trades. But, strong stocks, they lead, and they can certainly show relative strength against the broad market. So PDD, Pinduoduo, interesting stock. The next one is the Progressive Company. That's Progressive Insurance. Most people are pretty familiar with it. It's an insurance company, nothing exciting, but it's got really impressive long-term returns in the stock. Insurance is a pretty good business if you can run it correctly. You can see it's in one of the top industries in the Zacks industry rank, top 11%. It's got earnings growth forecasts, a little bit of a higher, 26% nearly, a little bit higher of a forward earnings multiple near 30. But it's got a nice momentum set up as well. So let's take a look. And again, you can see it's been trending higher. This is all-time highs. And okay, we can see the market just opened and it broke out from this flag. So it's been trading sideways over the last couple of weeks. And we got this sort of even smaller, even tighter bull flag, and we're getting a breakout. So as long as it closes today above 162.50, we'll call it, I think this one, is ready to go. It's going to show some relative strength. And keep your eye on PGR. If we see it below 159.75, you may want to look for a different trade, or maybe you want to wait. But definitely a good one to keep an eye on. PGR, Progressive. And the last one is the oil company, Ecopetrol. It's Colombia-based oil and gas diversified company. And look at this. You can see it is in the top 1% of the Zacks industry rank. It's got a crazy nearly 19% dividend yield. Extremely low forward earnings multiple, 5.5 times. And again, I think the mean reversion move, which I'm kind of anticipating in the price of oil, should be a catalyst to push this stock higher. So let's take a look at the chart. That's EC is the ticker. And this is something I've been watching for a couple of weeks now. You can see that there was this broader pennant broke out from, held this level of support. And now it's building out this smaller bull flag. And I think so long as the price of oil starts to show some strength and we trade above $12.75, I think Ecopetrol could, make its final year-end move, well above $13 level. Alternatively, you don't want to see it trade below $12.25. I think at that point, the technical picture is sort of broken, and you may want to look for other opportunities. But this is a good one to keep your eye on too, EC. So it's a nice little collection of stocks. PDD is a technology stock. Progressive is an insurance company, and this is for international oil company. So that's it for the trading setups today. Thank you for watching. Hope you found this valuable and interesting. If you like this content, definitely subscribe to the Zacks channel. And if you want more from Zacks, you can sign up in the promo in the description or go to zacks.com/promo. Thanks.